which are good anyway. It's a Finance Friday. We are talking with some great folks from the People's Community Bank, and today we are going to be talking to Mike Peterson. He is our speaker today. He's actually with the PCB Wealth Management team. Hi Mike, how are you?
I'm good, how are you?
I'm great. We should note that the opinions voiced today are for general information only and not for intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, contact and consult the appropriate qualified professional prior to making a decision. And those are big decisions to make, aren't there?
Yes, they are.
Yes, there are. So with the PCB Wealth Management team, what do you do at People's Community Bank?
I manage the investment center that's inside the People's Community Bank. There are 3 of us there. I've been there 24 years now.
Okay.
And our brokerage is LPL Financial, is a brokerage company we use for our clients.
Okay, so we're talking investing.
We are.
Lots of investing. And I think really we should say the sooner you do it, the better, right?
Time is on your side.
Right,
Yeah.
right. The younger you start, the better. I wish a lot of people could go back and start over again and maybe learn more about that in high school. It's a big thing, investing. So there's differences in all of the IRAs out there. Some people might have a Roth IRA, some might have a traditional. What are the differences between that?
So with the traditional IRA, if you make a contribution, you get to deduct that on your taxes, so it reduces your taxable income.
Okay.
So it saves you taxes the current year when you make the contribution. That money that you put in your IRA will then grow based on the investment inside that, and you'll pay taxes later when you take that money out in retirement.
Okay.
And for most people, it might be in a lower tax bracket than what they are when they're working.
Mm-hmm.
With the Roth IRA, you don't get the tax deduction. So
Okay.
if you put the money in, you do not get the deducted on your taxes.
Okay.
However, that money will grow just like the money in a traditional IRA.
Sure.
Based on the investment. The difference is you've already paid taxes on the money that you put in it,
Okay.
but the earnings come out tax-free. So anything that comes out of a Roth IRA, you're not taxed on
Nice.
when you take it out when you retire.
So it's going to be a different one for different people. It's going to meet their needs differently. So they need to talk to somebody about what they want to do, right?
Yeah, I usually, when I work with clients, we talk about what they're doing. We also have their tax person involved.
Smart.
You know, because
Yeah.
we want to be on the same page to make sure we're doing what's right for the client.
Exactly.
You don't want to have somebody that's going to do their taxes and they're like, well, you should have did this versus that.
Right.
Want to make sure we're on the same page and doing the right thing for our clients, because that's what our ultimate goal is.
Okay. So people can retire and live great, right?
Yeah.
Yeah, that would be nice. So if you are lucky enough to work for a company that will match money there in your deposits, how do you take advantage of that? How do you approach your boss? And this would be something mostly when you get hired they talk about too, right?
Yeah, when you get hired, they'll talk about what the benefits are and if they have a 401k or a simple IRA, or what kind
Sure.
of retirement plan that they have. And there's usually a waiting period to
Okay.
become eligible. Some could be 6 months or
Sure.
whatever their waiting period is. And then they'll tell you what the plan is and what the match is.
Okay.
And taking advantage of the match, like sometimes you'll put in dollar for dollar up to 3%
Right.
or 50 cents on the dollar up to 6. So if you're putting in that to get the match, you're getting free money.
Yeah.
And there's nothing better than free money. So
Yeah.
it's really important to take advantage of the match
Yeah.
and doing that.
Get everything you can from that company, right?
Yeah,
I
I mean,
mean, it's
that's-
your life. You're working for them, and it is a good thing to do. Take advantage of that company match. And like you said, maybe the company doesn't tell you everything you need to know. They should, but this is where you come into effect as well, too, right? You can help guide people to make sure they do get the full advantage.
Yeah, we look over what the plan offers, look at the funds that
Sure.
are in there,
Yeah.
come up with an investment strategy for them. I mean, the companies put the match out there. They want people to
Yeah.
use that and take advantage of it.
Right.
We just want to make sure they're doing that and getting the full advantage of their retirement plan at work.
Yeah, another thing where you should start early. I mean,
Yes.
because sometimes people do when you're younger, don't think you're going to need it right away. Do it now.
Yeah,
do
I
it.
mean-
Do it as soon as you can.
The biggest thing out there is if you hear the rule of 72,
Okay.
it's how long does it take your money to double? The best investment is time. The
Okay.
longer you put money in and wait. So if you get like a 7% rate of return, if you divide that by 72, it's a little over 10 years, your money doubles. And the sooner you start, the better it is. There's a cost
Right.
of waiting and procrastinating. And the sooner you start investing, the better it is. Even if it's only 3-4% in your 401k to start out, at least you're putting it in there. And if you get the match, and if it's if they're matching 50 cents on a dollar up to 6%, you put in 6. Well, if
Yeah.
they're putting in 3, that's 9%.
Yeah,
And it really adds up.
It really does. So think about that, especially young people getting into the workforce or people who have been in it for a while. Reevaluate where you are and maybe make accommodations for what you need.
Mhm.
Right? Yeah, it's a continuing thing because a lot of us work for a long time of
Yeah.
our lives. Things will change throughout that too. So there are contribution limits as well for IRAs and Roth IRAs for 2025. Is it changed from before?
It's the same for 24 as it is for 25.
Okay.
So if you're under the age of 50, you can put a contribution up to $7,000 now.
Okay.
If you're
Perfect.
old like me and you're over the age of 50, you get to add an additional $1,000, so you can put in $8,000.
Okay.
And you can still make a contribution for 2024 up until April 15th,
Okay, great.
which is Monday this year, so that's
Yeah.
the tax filing deadline.
Yeah, that'll be interesting. So
Yep.
there's lots of different things to know too, like charitable gifting from an IRA account. Do people do that a lot?
Yeah, I have clients that, because of how the tax laws changed a few years ago, where
Right.
a lot of people could itemize their deductions.
Sure, yeah.
Now that kind of went
Yeah.
away. Not that many people can itemize anymore.
You have to have a lot.
Yeah. And there's people that donate to charity and things like that.
Sure.
And if you're 70 and a half, the year if you're 70 and a half that year and you want to make a donation to a charity,
Mhm.
if you do it directly from your IRA account and have it sent from your IRA to the charity, you don't pay taxes on that. So if,
Oh.
say, a lot of people, for example, might be giving a donation to their church.
Sure. Yeah.
And
Pretty
they might
common.
be given $200 or $250 a month. If it's $250
Sure.
a month, $3,000. Well, if they just give it once and have the check sent to the church, they're taking the money out of their IRA, but then they don't have to pay income
pay.
on that. So
Nice.
it's it's a really great deal. It's a qualified charitable distribution, is what it's called.
Sure.
And it works very well for people that are giving anyways.
Mm-hmm.
Well, why pay taxes on it if you're doing the giving?
Exactly. Yeah, it's good to be good. That's for sure. We talked about the limits for contributions for IRAs and Roth IRAs. What about 401 plans in 2025?
So for 401ks in 2025, if you're under the age of 50, you can put in $23,500.
Okay. Wow.
So
Okay.
it used to be a lot of people was a certain percentage you could put in, things like that.
Sure.
Now it's a dollar amount.
Okay.
So it's $23,500.
Wow.
If you're over the age of 50 to 59, they kind of changed it this year. But between 50 and 59, you can do an additional catch-up of $7,500.
Okay.
So a total contribution of $31,000.
Nice. Yeah.
And then there's a weird age in there from 60 to 63.
Okay.
They let you put in more, up to $11,500, so $35,000. But 64 and over, it goes back to the catch-up of $7,500.
Okay.
The IRS changed the rule this year. It's a little quirky from what it was in the past.
Yeah.
But those are the catch-up limits for 401k contributions.
Okay. So there are some limits, but there's some pretty high ones there. Yeah. So does your 401k plan have a Roth option as well?
There's a lot of plans that do now. For a long time, Roth 401k wasn't an option,
Okay.
but a lot of plans have that. So when you're signing up for your 401k, the one thing to look at is, does there a Roth option?
Mm-hmm.
And would that be a benefit for you where you get that tax-free growth?
Right.
Again, working with your accountant, looking at your financial situation to find out which one would be better for you.
Sure.
Whether you do Roth or whether you do a traditional, or you could do a combination of the both.
Mm-hmm.
If you were putting in 8%, you could do percentage 4% one, 4 another. So it's just the dollar amount you're putting in that doesn't go over the max.
Sure.
So you could do traditional or Roth. Any match goes into traditional. So a
Okay.
match from a company cannot go into the Roth part.
Okay.
It goes into the traditional because it's tax deferred. But if you have that 401k option, Roth option on your 401k,
Right.
you just want to see if that would work best for you and talk to your financial advisor and your tax person to
Yeah.
see if that would be a better option for you.
That is the big thing there. Talk to your tax person and your financial advisor to help you. Because let's be honest, we do have a lot of people listening that might be self-employed and a lot of farmers out there. And there might be some people who hear Roth, traditional, 401, and might not be familiar with any of that language. So what they need to do is come in and talk to a financial advisor, make an appointment with you guys, and find out what they need to have as they go through life, right?
Correct.
Yeah, there's lots of options out there. For self-employed people out there, they can get in on that 401. They can do a lot of things, can't they?
Yeah, with self-employed, there could be different IRA options like
Sure.
a simple or a SEP.
Mm-hmm.
There are individual 401ks for just if a sole proprietor. So there's
Sure.
options out there for people that are self-employed also.
Yeah, there's a lot of options out there. It's a great thing to do to think about your future and be prepared for it.
Mhm.
Do you find that a lot of people are not?
I think it's gotten better where there's
Good.
some people that have been starting early, and then it's just planning on when they're
Yes.
going to take it out.
Right.
You get people in the savings mode, and
Sure.
then when they get closer to retirement, how do you change that mindset now
Right.
to use that money to produce an income stream for you?
Right. There's a lot of options, folks. There's a lot of things to know. And there's also the fact that you need to review what's going to happen with that money there if something were to happen. Your beneficiaries. You need to talk about that and review that and make sure that's all up to date too, right?
Yeah, I mean, one of the things when we go through and review your IRA or your 401k plan when you come in and go over your accounts is making sure your beneficiaries are up to date and current.
Sure. Yes.
Sometimes that doesn't always happen.
Right.
Somebody could get married and they still had their mom and dad listed as a beneficiary and didn't
Right.
update it to their spouse, or
Sure.
got divorced, or things happen. You want to have contingent beneficiaries also. So
Okay.
if you have a husband and wife, they might name their kids as contingent beneficiary, or something happened to them that it automatically goes to the kids, so you don't have to worry about going through probate and stuff like that.
Right.
So the more you have that done, it makes it easier if something were to happen.
Yeah, there's a lot of lingo that you need to be aware of when you're doing all this, payable on death and all that. So like you said, trying to avoid probate because that can take a while
Yeah.
in some cases. So review the beneficiaries, get all that information, make sure all your T's are crossed and I's are dotted, right?
Correct.
Basically all of that. It's a lot of stuff to take in. It's a lot of information. Do you find that things change year to year? Or it pretty much stays the same and is a general baseline?
Well, people's lives change, so you have to
That's true,
update
too.
for that. So, when you go in for a review, it's good to come in and see what's changed in their life and
Sure.
things that have happened. So, for some, it's pretty consistent, but then other ones, life happens, things happen,
Yeah.
things change, and you just have to make sure everything's meeting what they want. Did they go update their will, and did they do a trust? Did they do things like that? Do we need to change the titling of assets and things like that because they did a trust? So
Sure.
those are all things that are out there that we just need to make sure everything's up to date.
Yeah. So make sure everything is up to date. Know what you're doing there. If you're contributing to a Roth IRA, a traditional IRA, your 401k, make sure you're where you need to be because things do change all the time. Now, Mike, with you being PCB Wealth Management Team, are you right there at the bank location?
Yeah.
Okay.
Yep, there's 3 of us, myself, Rob, and Jacob.
Okay.
And we cover all the branches, Mazo, Spring Green, Plain, Richland Center, Barneveld. So we're all in all the branches, yeah.
Okay, perfect. People just need to call and make an appointment with you.
Correct.
Perfect. What's the best number for that?
608-795-1161.
Perfect. And I know you can find out more about the bank in particular on the website. It's thepcb.bank, or you can check them out on Facebook too, the People's Community Bank on Facebook. You guys have a lot of great information on there.
Thanks.
And I'm still pretty impressed that you guys are one of 2024's top places to work. Right? You guys like it there, right?
We do.
Excellent. I like to hear that.